Let me just start. Okay. All right, folks, good afternoon. Thanks for being here, being on time. Let me just take my rule. Now, I email Aisha before I even start, so she got that email long time. Anyhow, right, so not seeing Aisha, not seeing Alexis. Aliana is here, Nessa is here, Ayaz, Jada, and Jaziri, Jordan, Cassie online, Kelsey here, Liam here, not seeing Logan, Mandy here, Marcus here, Matthias, Noah, Nyla, Olivia, what is the replay? Paige. I know I didn't see Sequoiabun. Right, anyhow. Shamo is here today. Shiraz watches the replays. Talia is here. Teresa will come on Wednesday. Valentino is here. I'm not seeing Yuri. He may be on sooner. Okay, cool. All right, so we have most of everybody. Let me just put a dash by Judith's name and Olivia. Right. Okay, so just a few people who normally here, not here yet. All right. Okay. All right, ladies and gents, we are continuing our revision of the income statement, and today we're going to start talking about the adjustments. So the adjustments, we have about, well, technically it's about 4 of them, right? So you have accrued items, prepaid items, and that applies specifically to expenses and revenues. So if you want to take each of them separately, accrued expenses, prepaid expenses, accrued revenue, prepaid revenue, that's 4. But each of those are pretty easy. It's either you add them or you subtract them, right? And the little trick you could use to remember whether you add or subtract is you add your accruals. So accrual starts with an A, and so does the word add. So you add your accruals, and you subtract your prepayments. Anyhow, we'll discuss that. And then we also have the two provisions, right? Which I said are a bit more accurately called allowances, right? Because, like I said, I was doing some reading for my CAPE class. And in the reading, I saw something in one of the documents that says, a provision is a liability of uncertain timing and amount. Now that is a bit beyond the scope of your syllabus, so we're not going to worry to discuss it in much detail or at all, right? So the things that we call provisions at the CSEC level are actually more correctly called allowances based on that definition. But since the textbooks call them provisions, right, we will call them provision too. There's no scene. If anybody have $1 they want to donate, then like, right, now what I want to do today, of course, so we're going to be reusing and repurposing some of the questions we had before, right? So what I will do, for those here and online, is we're going to go through a couple of them as an example, or one as an example, and then for the others, I will print out the whole cost of goods sold section, and then the, the expenses, and it's those expenses down there that we did on Monday, those are the ones that require adjustment, right? Now, I don't like to try to teach all of the adjustments all at once, right? Because each of them in their own right can be a little challenging, right? So what I do is I teach one at a time. So we lost a half an hour. That was my fault. Sorry about that. So we have just enough time to try to do all three: accruals and prepayments, provision for for bad debts, and provision for depreciation. So what we'll do is we'll kind of add them on as we go along, right? So it'll have a bit of repetition, but you won't have to write out like a whole income statement again and again. I'll print out what we did, take out what we need to do, and you'll put just that particular part in, right? And then the last half an hour, which we were supposed to have, was that I would then find a couple new questions or stuff that I made up and give you all to do those in their entirety. Because at the end of the day, you're supposed to be able to put everything together. Because in an exam situation, you never know what they're going to ask you or how they're going to ask you to do it, right? Okay, cool. So what I want to do is zoom in here, right? So this PDF is the same PDF that's been in the chat all the time. Let me just go to the, sorry, is that me? It is. All right, my bad. See, I will put this here. In case my wife is calling or messaging, I want to be able to see it. All right, just now. Right, I'm just going to forward the document to the chat again, so you don't have to scroll up to find it, so it's there. So we having a lot of excess and duplicates in the chat, so we may have to delete some stuff there eventually. But we'll do that some other time, not right now. Okay, so as light wholesale doesn't really provide any adjustments for us to do, although some people say closing stock is an adjustment, which we know how to do it already, because we did that last week. So the first question we're going to tackle, let me just make sure. Okay, cool. Right, so I think John Oinston is a good question to tackle. So what I'm going to do is I'm going to pull up John Oinston, which is the 2021 January question. Let me pull up the the solution format, 2021 Jan. All right, okay, cool. So what I'm going to do is I'm just going to copy and paste that here. Okay. Okay, I'm trying to, wait, hold on. Right, there you go, right. I know what happened. I had protected the sheet. So what that meant is I couldn't select anything other than certain cells. And it helps when you have a sheet that you don't want anybody to delete anything in, right? Okay, so what we're gonna do is we're just going to, hold on, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so I'll do 12 copies of this. Hold on. This page, yeah, because I'm gonna do up the print all the other stuff for you guys. Actually, hold on. Do I need to? Nope. I know what I'm gonna do. All right, cool. So we'll put that to print. Right now, John Oynton is a nice one to start with because we do have like a whole cost of goods sold section to go and deal with. All right. Oh, here's Aisha. All right. Hey, good afternoon, Aisha. How you doing? Yeah, good time. We're now gonna start the first question there. So today we're dealing with the adjustments, right? So I am printing out this stuff for you guys in class. I'll give it to you guys, but if you could follow on the screen. So that way when you get the paper, you'll kind of have an idea about how to go about it, right? So John Oyston is the owner of Oyston's Barber Salon. On 31st December 2020, he provided the following trial balance. Now, a barber salon, is that, what kind of entity is a barber then? Does that entity provide a good or a service? A service. And a service relative to a good. Is a service tangible or intangible? It's intangible. What does that mean? It doesn't have a physical nature. Very good. You can't drop it on your foot. All right. So if you're going to do accounting at the Form 6 level, there's a section in Unit 2, which is Cost Accounting, Module 2, which I'm teaching right now in my Form 6 class, that deals with the difficulties in costing a service. All right. So if you're interested in that, have some stuff like that. What? Oh, right. Sorry. Yeah. So with the fact that it's a service, another person that supplies goods implies what about stock? Do we have any stock? We have no inventory, right? We're not trading. We're not buying something to resell to make a profit, right? Now, of course, some barbers do, but that's not the case here, right? And so it means that this is a service entity. So we just have a kind of sales figure. But that sales figure here, they didn't call it sales. What did they call it? They called it receipts from customers, right? So that was your sales item. Okay, actually, let me give out the stuff in the meantime. Right, so we have no cost of sales for this question here. Try and calculate. One less thing to worry about. So we can focus specifically on the expenses. And like I said, any of the other questions that we'll be doing today, they do have a cost of sales thing, right? I'll print out all that stuff for you, so you don't have to worry about doing it again. Although, doing it again is good practice. How's the headache? Medium? Alright. You had water? You have water? Alright, so keep drinking the water. Alright, yeah, so like I was saying. Right, so what we're going to do is we're going to kind of populate stuff as we go along here, right? So let's put that on top, this one below. So you guys would have actually, you know what? I need to actually send this to the people online as well. So give me one sec. Sorry, and this is fillable. Ah, brilliant, it's fillable. All right, so this is John 2021. Right, so my online people are sending something to you, and I'll email it to Aisha, don't worry. Yeah, so this is the John Wait, is the WhatsApp gonna open? Because it was giving some trouble on the other laptop, the streaming laptop. That was the problem. Yeah, giving some trouble there. All right, hold on. Let me see if it loaded up in this thing already. It was a small document, so it should be there already. Come on, we're good to go. On my computer. Move a little faster. Right. So let's go back and start filling out stuff as we go along. Right. Okay. So like I was saying, so the first thing I want you all to do, if you haven't done so, is to head up, right, for instance, Barber Salon income statement for the year ended 31st December 2020. Right. From there now, the first item you're gonna put, so you all have this format below here, right? So of course you put any headings in this big rectangle here. You put your dollar signs, right? And you're gonna put the first thing you're gonna put is revenue, right? Now they call it receipts from customers, which I'll put at the top here, right? So you could call it revenue, you call it receipts from customers. That's perfectly fine, right? So that's the first thing we put in there. Some problems with my laptop. Mr. Prince, fated. Interesting name. Right, and now we're going to talk through these expenses and the relevant adjustments. So we have one prepayment, one accrual, and we have some depreciation stuff. So maybe we could mix in the depreciation because the depreciation is actually relatively simple, right? They're both percentage calculations, just of slightly different things. All right, so hope everyone has that stuff here. Okay, so those in person and online, well, you all should be able to see what's on the screen here. I'll zoom in a little bit more as a matter of fact. All right, so we have this trial balance here. So we have capital, accounts payable, cash at bank, drawings. So we know not everything with it. We know expenses have what kind of balance? Debit balance. But not everything that has a debit balance is an expense, right? What are some other items that have debit balances apart from an expense? Assets and drawings, right? That's correct. So cash at bank is an asset. It has a debit balance. Drawings is what? A reduction in capital. So it's not an asset. It's not a liability. It's not an expense. It's not capital. It's not revenue. It has its own kind of classification, right? Drawings is whatever, any resource the owner takes for his or her own personal use is drawings, right? Or withdrawals. So it literally represents a reduction in capital, right? So we had those two kind of other items here. But we have some items right here. Rent expense, electricity expense, general, supplies, and then they're flinging receipts in the middle of everything. And then you have wages down here. All right? Now, here's Yuri. Hey, good afternoon, Yuri. How are you doing? Good to have you on. Yeah, don't worry. You're not too late, right? Hold on. Right, yeah. So we're now going through an example question about how to deal with adjustments. Yeah, no worries. It's all right. Don't fret. I was late myself. I started 4:30, and we now kind of starting a question because I have to kind of do a few things and send it in the chat and thing, right? So this is the one in the trial balance, no. When we do the calculation of the depreciation expense under the reducing balance method, it plays a part in the calculation then. Minus that. And then multiplied. Correct, yeah. Right. So we have those expenses and we have these things. We have furniture at cost and then provision for depreciation furniture. So the question Nyla had is does this go in the income statement, this provision for depreciation on the furniture or on the equipment? The answer is no. Right? Those things, right? If you notice, they're also in the credit column. So they're definitely not going to be expense items, right? They do play a role. Sorry, those items might play a role in the calculation of depreciation expense, but we'll come to that just now. Now, your additional information section is usually where you'll find literally the information you will need to adjust your items, all right? So on Monday, we just kind of plugged and played, right? We just kind of flung in some expense items without regard for any of the adjustments. And like I said, it was just to get a momentum going with, hey, look, this is what goes where. Now, in the additional information section, we have rent prepaid and general expenses unpaid. All right. So let's talk about, so on the top here, we have the rent expense of 4,000, electricity of 12, and general of 12. Right. So these items, the rent and the general, have adjusting items down in the additional information section. So how do we adjust for these things? Right? Correct. So what Liam said was that we would actually decrease this, we'd subtract this 800 from the 4. That's correct. So the general rule of thumb is any item that has a prepaid component, you have to subtract that prepaid component from the trial balance figure. Right? The reason is because a prepayment is an amount paid in advance. Right? And if we're talking about expenses specifically, in this case, it's paid in advance of being incurred. In other words, let's say, for example, like my rent is 3,500, but if I pay a 4,000, right, it doesn't mean my rent expense went up to 4. It simply means I paid more than I was supposed to. So now next month, instead of paying 3,500, I can simply pay 3,000 and call it joy, right? Sorry, give me 1 second. I want to put something to print real quick. Sorry, my wife calling. Hello? Hello? Oh, wow. Okay, that's great. Yeah. No, you're not going to. You may wake up like 7, 8 o'clock. Yeah. Well, anyway, that way your mom wouldn't have to really worry about dealing with him while they go to drop stage. So I guess it works out on that front. Oh, okay, she hung up. Cool. Right, sorry, so like I was saying. So a prepaid amount is an amount paid in advance of being incurred. In other words, we didn't have to pay it right now. So like I said, my rent is 3,500. If for February I pay 4,000, it doesn't mean that my rent expense was 4,000. Yes, I paid 4,000 in respect of rent, but the agreed contractual figure is 3,500. So if I was to do an income statement for February, the rent expense figure would still be 3,500 in the income statement, even though I paid 4,000, right? So if I was supposed to pay 3,500 and I paid 4,000, what's the extra amount that I prepaid? 500. So what that would look like, so like right here, in the trial balance here, right, I would have 4,000 that I paid, because the payment figure is what ends up in the account, and that ends up in the trial balance, right? And then down here, it would have said 500. So to find the actual amount incurred, I would subtract the prepaid amount from the trial balance figure, right? So that would give me, in my example, 3,500. In this example, if I subtract 800 from 4,000, what do I get? Correct. So I'll take the 4,000 and minus the 800. All right, so we... All right, so that's that. Cool. So you subtract any prepaid amount. Now, the next one says general expenses unpaid. Now, another word for unpaid is accrued, right? ACCRUED, accrued, right? I had a student, actually, I saw her in Starbucks yesterday morning, when my first student, when I started this iteration of my classes, and she couldn't say the word accrued, it was always accrued. Like she could not put the R before the U, I don't know, so it was always accrued. Anyhow, so if you have an amount unpaid, but it was supposed to be paid, right? That we call that an accrued amount or an unpaid amount, an amount outstanding, an amount in arrears. All right. Now, correct. So to parallel the example I gave just now, if my rent figure is 3,500 and I pay 3,000 in respect of rent, it doesn't mean my rent went down. It just means I didn't pay enough. I still have an amount outstanding in respect of rent expense for the current period. Right? So again, if my rent expense, my contractual monthly obligation is 3,500 and I send them 3,000, I have short paid how much? 500. So that's my rent accrued, or my rent expense accrued, or my amount outstanding in respect of rent. However you want to phrase it, right? Now, when I go to prepare my income statement, the amount that's going to go inside of the income statement in respect of rent expense is still 3,500. Why? Because that was the amount that was incurred, right? My contractual obligation was 3,500. That goes in the income statement, right? Even though I paid 3,000, that doesn't matter for the income statement. What matters is how much was actually incurred. So what I would do is I would take the, here, it's the same figure, 500, and add it to my amount actually paid. So in respect of general expenses, this unpaid or accrued portion of 500 has to be added to this 1,200 here, right? So general expense. Well, I'll just put general, right? So I'll put 1,200 plus the 500, right? Add accrued amount. Right? And well, the electricity could go in between here. Electricity, yes. Okay, so if we have any accruals, we add them to the corresponding figure in the trial balance or list of balances, because we don't always get a trial balance. We usually get a trial balance or a list of balances, right? So yeah, please write as we go along for this example, right? Those online, if you're typing it out, cool. If you're writing it out, cool, no problem, right? Let me know. Hey, Asmara, thanks for sharing. I appreciate it. All right. Hey, Alyssa, afternoon. Oh, Asmara, she going? Okay, cool, no problems. Right, yeah, so we add any accrued amount to the corresponding figure in the trial balance. So like on top of here, right, the accrued portion will be added to the corresponding figure in the trial balance. Any prepaid portion is subtracted from the corresponding figure in the trial balance above. Right, so you add accruals minus prepayments. Right, so again, accruals and add both start with an A, so that's why it's kind of a bit easy to remember that one. The subtract and the prepaid don't really go together, but as in the letters now, you know. And I can't think of any word for subtract beginning with a P. Subtract. Instead of minus, pinus. No, that's not a good one to use. Don't use that one. Right, okay. Now let's scroll down and see what else we have. We have supplies expense, wages expense. What else do we have in the additional section here? Right, so we only have depreciation to talk about as well. Okay, cool. So what we're gonna do down here is we're gonna fill in supplies expense. No. Supplies. Wages. Oh, uh-huh. You wanna check it out? Yeah. I got a bit of juice. 22. Okay, that's good. All right, cool. Yeah, I hear you. That I know the feeling, but that's a bad thing. So you had a. I picked up a physics book, but I'm still like. You're tweaking. All right, no problems. Right. Right. So supplies and wages had no adjustment. So not every expense will require an adjustment. Not every expense will be either accrued or prepaid. Right. Usually it's one of each. Usually, right, because you also have the depreciation to cater for, as well as the provision or allowance for doubtful debts, which again is usually called the provision for bad debts. But we'll get to that a bit later. Okay. All right. Google Meet. Can you guys give me a quick G in the chat if you're okay? If you're good with that, as in you're good with what to do with the accrued amount. You're good what to do with the prepaid amount, right? If you need me to repeat, re-explain, give me an R, and that's not a problem, right? Just but you have to let me know. All right. But just excuse me for a second, right? Anybody here? Like photography with your camera? Anybody here do photography with your cameras? Yeah. I have a Sony camera there for Christmas time. I wanted to use it to make content, and they have a micro HDMI out. So I bought the cable and I hooked it up to the laptop to use. So basically, I was able to do like real videos in 2022 by using a webcam instead of phone and transferring because I have a video input that is pre-recorded software uses. When I hook up the camera, it's outputted at 2160 or 4K. Like, all right, good. But then the video is this small. And when I try to enlarge it, it's just pixelated. So it's right. So what I mean, type of video is this? I mean, like yeah, like you know, just yeah, DJ like or you mean file something extension. I'm not sure. MP4. But when I recorded directly to the memory card and then I transferred, brilliant. So I mean that's what I had intended to do initially until I found out about the HDMI out. I was like, hey, I could save time, but anyhow. Right. Okay. All right. In class, people, are we okay with how to treat with accrued and prepaid portions of expenses? Yeah. Any questions? Anybody? Anything? Okay. Cool. All right. Okay. So, contrary to what I said just now, in terms of what I like to do, in terms of one adjustment at a time, even though accruals and prepayments are technically two different things, we are going to talk about depreciation now. All right. Now, we're not going to get into all the nitty-gritty behind depreciation. We're just going to learn how to calculate the depreciation expense that goes in the income statement under each of the two methods that you are required to know for CSEC PoA. Those methods are the straight line method and the reducing balance method. All right. The straight line method is, usually they'll give you a percentage. Sometimes they might give you the full amount in the additional information, so you don't have to calculate it. And occasionally they'll give you a number of years. If they ever give you a number of years, all you have to do is take the cost of the item and divide it by the number of years, right? Okay. Now for straight line, so let's talk about the furniture first, because the straight line method is the easier of the two methods calculation-wise. The reducing balance method has one little extra component to the calculation, so it's not harder per se, right? Technically speaking, okay, if you have one more thing to do, it is harder, but it's like saying, okay, take 2 steps instead of 1. Right? Anyhow, before I go down a whole road with that. Hey, Risha, how are you doing? Thanks for the follow. Appreciate it. Right. That's them. Who going out for the dominoes? Oh, okay. You need help? You sure? It's just 2? Oh, okay. Okay. Okay, so let's scroll down to get a little bit of room, right? So we're going to talk about the depreciation on the furniture. Okay, now it says that furniture 5% per year using the straight line method. So all we do is we take the percentage and we multiply it by the cost. The cost being $10,000. Right, and this is the straight line method. Right, so under the straight line method, to calculate depreciation, all you do is you take, just now, one sec. Yeah, sorry. Just any dogs, right? So under the straight line method, now there is there is a kind of original formula, which is cost minus the residual or scrap value, then divided by the number of years, the estimated useful life. Usually in questions like this, you don't get that information. You get a percentage or you get the figure, or like I said, a number of years. So all you have to do is take the percentage that the question gives you and multiply by the cost of the asset. All right? Now, for the equipment, that's 20% per year using the reducing balance method. For the reducing balance method, there's one little adjustment we have to make, which is where the provision for depreciation on the asset comes into play. The existing provision, right? So all we have to do is multiply the percentage, the depreciation rate, by the net book value. What is the net book value? The net book value is the cost minus the existing depreciation. All right, so depreciation, on the equipment. So it's 20%, all right, 20% multiplied by, so we're going to take the 20,000 here and minus the 2,000 right here. All right, so that's the reducing balance method. So that's equal to 2 by, right. So again, with depreciation, you have two methods you have to know. You have the straight line method and you have the reducing balance method, right? Under the reducing balance method, under the straight line method, you simply take the percentage, the depreciation rate, and you multiply by the cost of the asset. And usually, it'll tell you whatever the asset's name is, and they'll put at cost, right? If they don't put at cost, and they also don't put book value or net book value, you could safely assume as the cost, all right? And it will be in the debit column. Remember, assets have debit balances, right? Some people, and this has happened multiple times over the years, they'll see this item. Hold on, let me see if I have that. They'll see this item here, right? The provision. Come on, man. All right, yeah. They'll see the provision for depreciation furniture, and they'll put that item as the cost of the asset, even though there's a whole phrase in front of it that says provision for depreciation, right? It just doesn't click for some reason or the other, right? So you have to kind of step back and say, okay, look, this says this, and it's in the credit column, so it can't be the asset. It's actually the provision that has been charged in previous years, right? Right, so under the straight line method, you simply multiply the percentage depreciation rate by the cost of the asset. Under the reducing balance method, you multiply the percentage by the net book value. The net book value is the cost of the asset minus any existing depreciation, any existing provision, all right? Sometimes they'll also put accumulated depreciation instead of provision for depreciation, right? So be on the lookout for that as well. All right, sorry, give me 1 sec. I want to put something, I just want to put something back to print again. What? Sorry. Okay, cool. Rick Rock Motors, what's going on? Let's give it a couple seconds, sorry. Nice, okay, back here, right, yeah. So, right, so that's the depreciation calculation there. Under the straight line, you multiply the rate by the cost. On the reducing balance, you multiply the rate by the net book value, which is the cost minus any existing depreciation on the asset. Okay, so I'm going to maximize here now so we can see the whole thing, and I'm going to send a picture of this in the chart. Sorry. Right, okay, cool. All right, Google Meet, if you guys are good with the depreciation calculations, please give me a G in the chat. If you need me to re-explain one more time or two more times, that's not a problem, but you gotta give me an R for the re-explain. All right, and while I'm waiting on G's, in class, people, how are we feeling with the depreciation in the question there? Are we okay with both methods? Anybody have any questions at all? No? Okay, cool. All right, so I have 8 out of 10 people. So the next two, please let me know when you get a chance. I'd appreciate it. Oh, let me put that Aisha's present, right? What's in Alexis? Or Logan. I didn't hear from Logan today. What's the question? Oh, and Yuri came, right? Okay. All right. All right, cool. Sorry. All right, so that's John Oinston. That is, I have to scan. All right. Anybody still take anything down? No? Okay. All right, cool. So let's take a look at the next question. Let's maximize here. We could take this off. Sorry. All right, the next question up, sorry, is W. Watson. Now, W. Watson does have a doubtful debts component, but we're going to omit it for now. But what I will do, right, is I'll print out the question for you all, and I think I will attach this, what you call it? Hold on, does that make sense? No. I have a, this is 2020, Jan. All right, cool. So I'll have a format for this already. Right, so what I'll do is I will, I'll take out this stuff here. And let me just do a quick count. Right, so 1, 2, 3, 4, right? 5, 6, 15% of receivables. 15% this is 120. Okay, cool. Right, so what was it? So it was 1, 2, 3, 4, 5, 6, 7. Okay, cool. So 7, 8, 9, 10. Okay, cool. So 1, 2, 3, 4. Oh, okay, cool. 1, 2, 3, 4, 5, 6, 7, 8. Right, okay. So what I'm gonna do is I'm going to, this is W. Watson. Right. This is the 2021 question, right? No. 2020. Template 02. Right. Let me convert this to. Sorry. Right. So I'm gonna send this in the chat, but I want to send the question too. So let me just hold on. Should I send the question too? Yeah. I'll do that. Okay, cool. So. All right, so we're doing 2020, right? All right. Okay, so let me see. Oh, wow, lots of people here to say hi to. All right, so we're gonna go back here. We're gonna zoom in a little bit. All right, so Google Meet. I'm going to send you this stuff in the chat, and I will email it to Aisha as well. All right, so 2020, 2020. All right. All right, so that stuff you guys could open and fillable. So Aisha, I'm emailing you now. Right. So you have that as well. Okay, cool. Right. In class people, just give me 1 sec. Let me all right. Doing a counseling college and boy me feel lost. Yeah, I hear you. I hear you. I could feel that way. You can always message me and let me know what topics you need help with. I have a YouTube channel. It has lots of stuff there. So you can always check it out. Same name, Adaptation on YouTube. Oh, we're just 12 anyway. All right, cool. Okay, cool. So let me just let us print. We'll take a little read through this question. All right, while it's printing. And we'll see what we can glean from it. Okay, so we don't have to worry about the first set of stuff, like the purchases, sales, all that stuff at the top there. We're really focusing specifically on the expenses go down. All right, so I'm going to split the screen as well. We actually could go up to there. And put the additional notes. Oh, lovely. So everything kind of fits. All right, cool. So let's just take a little, actually no, everything doesn't fit because we're not seeing the information for the, right, the depreciation. So, okay, cool. Well, we'll come back to those, all right? All right, so ladies and gents, here we're going to talk about, right? In this trial balance here, which you can see on the screen, which is coming to you all just now. Wait, is it really doing the two-sided thing? Oh, wow, that's dumb. But okay, right. So we have electricity, telephone, salaries, bad debts, right? So if you look in your additional information section, do we have any adjustments to make to electricity? Yeah, it says electricity what? Prepaid. So what do we do with the 50? Add or subtract it? We subtract it from the 600. Okay. What about telephone account outstanding? What does outstanding mean? That's accrued, right? It's accrued. So what do we do with an accrued portion? We add it to this figure here. We also have a second accrued item, which is salaries. So we're going to add that to salaries, right? Now, bad debts can't have an adjustment. Well, accrued or prepaid. It could be incorrect and we have to correct it. That could happen. All right. So what I'm going to, so let me just wait for this stuff to finish print fill. But those online, you guys could go ahead and start filling in specifically these 4 expense items here. After that, we'll backtrack to the depreciation, right? Which of course you could go ahead and check out. I could do that, but I don't think, should I? Yo. As in it make it warmer. For math? Alright, no problem. I wanted to say no problem and no worries, and I said both of them at the same time. Yeah. Actually, we could see everything. Look at that. All right, cool. Right. So, right. So in this one, you guys are gonna fill in all of the adjustments that we did just now. The accruals, the prepayments, and the 2 depreciation methods, right? Now the interesting thing is that in the depreciation method, both of them are straight line. Alright, but here what I actually, yeah, and the question doesn't give us any depreciation, so we are not gonna make it up. Right, so we'll use straight line for both of them, so we'll have a little slightly easier time. Alright, this stuff's gonna take this, so make it, Did we not get one? Right. Give me one sec. I'm gonna put back a couple more to print. Yekta, keep seeing you popping up. Good afternoon. Selena, GD, what's up? Right. Right. So y'all would have the first set of stuff kind of put in for y'all already. So like I said, what you're putting in for me now is you're doing the expense. So start with electricity. So electricity, telephone, salaries, bad debts. Then you can rounds back to do the depreciation. And again, it's straight line method. So you're just multiplying these percentages by these cost figures here, right? Now, don't finish it off. Don't add them up and then find net profit. I want you to just do the expenses for now. And I'm going to use this question as the example of how to deal with the provision for bad debts or the allowance for doubtful debts, right? So again, don't add, when you finish, get the expenses, don't add them up, right? I'll use this question as the example of how to deal with or treat with the provision for bad debts, right? So you'll technically get it for free. Right, so once again, what you're doing is you're dealing with the electricity, telephone, salaries, the bad debts. Now, electricity, telephone, and salaries each have an adjustment. Bad debts does not. And you're also going to be calculating and putting in the two depreciation figures. So again, they're both straight line methods. So all you have to do is multiply the given percentage by the cost of each of the assets. Right? And then don't total it yet. Leave a space for the provision for bad debts. I'll show you how to deal with it. How fortuitous. It happened twice. That is brilliant. Did it really happen twice? Right? And of course, if anybody online or in person has any questions as you go along, it's not a problem, right? If you forgot how to do something, that's okay. I'm not going to hold it against you. I'm not going to get vexed. I'm happy to answer your questions if you need help. That's why you are here. Not to fill a space. You're here to learn, to get help. And I am happy to provide. I can't learn for you. That's the only problem. Hey Lizzie, how you doing? Good afternoon. And the other, okay, well, just jump out. So now we can have like 3 people, but I can only see 1. Oh, and of course the paper ran out. Papier. right, so I'll give you 2 or 3 minutes again, and then we will fill in the stuff so far. All right, folks. So, I feel like most of us finished that. So let's get to it, shall we? Okay, so this is W Watson. Is Watson right? Yeah. Okay. Cool. So let's start putting in some stuff, right? So how we're doing this, boy? Okay, I know what to do. Right, we're gonna put this one up. I'm gonna put this one down, and we're gonna go to them one by one. All right. So of course I'm gonna split the top here, and let's see if we could fit. Yeah. Okay. Cool. Down here. Okay. So let's start. So electricity. Right. So we have a 600 here. What's the adjustment? Is it prepaid or accrued? It's prepaid. What do we do with the prepaid portion? Add or subtract? Subtract. The prepaid, yeah, we subtract. That's correct. So it's equal to 50 minus 600. Right. Then telephone. Why is... Oh, no. I understand, yeah. Right. So the telephone is accrued. What do we do with the accrued portion? We add it. Very good. Right. Salaries is also accrued. So we have to add there as well. That's 3,000 plus the 500. Cool. Right. And then the bad debts figure this is put there. 980. Okay. Sorry, bad debts. Right. Okay, in class, people, are we okay with the 4 items so far? Any questions? Anybody? Anything? All right. Google Meet, only if you need me to re-explain anything in here. If you're good, hold on to the G. All right? I'll take the full G at the very end. All right? For sure. All right. Now, we have a couple of non-current assets, shop fittings and van, and we have some depreciation, both straight line method, right? So, depreciation, van, right? Sorry, shop. Let's do shop fittings first, right? There's no real necessity to put shop fittings first, but just that it appears first, so let's just do that. So we have, what's the rate? 10%. And then the cost is? Right, so that's the, sorry, hold on 1 second, huh? Right, and then the van is 20%. Right, 20%. And the cost is Right. Okay. All right. All right. Who's that? Hey, Fritavi, how you doing? Long time no see. Good evening. How you doing? All right. So hold on. So again, don't worry about this just yet. Okay. So what we have so far should look like this: electricity, telephone, salaries, bad debts, depreciation, shop fees, and VAT. All right. So in class, people, you okay so far? All right. So Google Meet. I'll take the G now. Right. Definitely not Anderson. Manufacturing. Oh yeah, glad to hear that, boy. Yeah, I'm glad they found it useful. Yeah. So Google Meet. If you guys are good with the income statement, well, the expenses section thus far, just kindly give me a quick Genie chat, please, and thanks. All right, lovely. If you need me to re-explain anything, it's not a problem, but you had to tell me. They give me the R. All right. Okay, cool. Okay. All right. So again, 8 out of 9 now. So somebody jump out. Actually, no, 8 out of 8 because I forget Jordan on 2 devices. Sorry. All right, cool. Right, cool, lovely. Okay, so now we're going to talk about the provision for bad debts, right? Or provision for doubtful debts, which is, well, allowance for doubtful debts, which is the more apt name, to be honest, right? Anyhow, okay, so let me give you a brief explanation. Now I have a video, right, on YouTube that I made about that whole topic. So you could always feel free to go there and check that video out if you want to get a from scratch explanation, right? But long story short, the allowance for doubtful debts is something we have to create in order to abide by a concept called the prudence concept, right? The other name for it is conservatism, all right? Now, what is prudence? Prudence is the exercise of caution in the face of uncertainty. Now, let me explain what that means, right? So, it's a kind of multi-step thing, so just follow me on for now. Again, you don't have to write a thesis on this afterwards, right? You should be able to explain it because they can ask you about it, but that mightn't be a thing for today, right? So, check this, right? So, first things first, the word account means to explain, right? Account is not only solely and necessarily the T account thing that we use, right? It's not that. The word account means to explain. When we drop accounts, we are drawing up explanations for each of those items. We are explaining what happened to an asset, a liability, a revenue, an expense, etc., right? We just have a system we use for financial accounting, right? Financial meaning what? It relates to money. And accounting, of course, is explaining. So we're explaining where the money come from, where it gone. Long story short, right? That's what accounting is. Well, part of it, right? Now, when we are doing what you call it, right? So if we're explaining about money, would you agree that if we are providing information, it should be accurate? Yes. Okay. Okay, so you all ever did an exam and you went in the car after and whoever, your mom, pops, whoever it was, right? They ask you, how you feeling in your exam? And you feel like, hey, I mashed up the exam, that's 90-something% easy. And they say, maybe a 70-something, 80-something. Why? Because you had the experience before where you feel you do good, you say full marks and you fail, and you feel like a baby, right? So you no longer look to give a realistic, you try to manage expectations. Correct. So even though you feel that you mashed up the exam, you don't know for sure, right? So you have what? Uncertainty. So instead of telling them, hey, I score 98% in the exam, when really and truly that's what you feel, and reality mightn't match your emotions and feelings, right? So you kind of downplay how you're feeling. You say, well, maybe a 75, 82, somewhere so. So you are exercising caution because next thing you tell them 98 and you get a 70 something and of course they get vexed, what happened? So you're exercising caution in the face of uncertainty. You're being prudent, right? So when we as accountants provide information, we want it to be accurate. We don't want it to be misleading. If you're doing that, you are not doing your job as an accountant, right? Now, to cut through all the extra talk, we're talking specifically about receivables, right? Receivables represents the amount of money people owe us, right? Here's a simple question. Anybody ever owe you money and didn't pay you back? Right. If you knew who would not pay you back, would you lend any money? No, right. Can you always know in advance who will not pay you back? Yeah? Oh, sorry? Not all the time, right? So when you, sorry, so isn't that when you don't overstate your profit or debts? Right. So Anderson, that's a simplistic explanation of it, and actually there's a little more to it, but you're on the right track. Yeah, but you're on the right track. Yeah. So if you knew who wouldn't pay you back, you wouldn't lend them money, right? Now, in business and in life, we don't know who won't pay us back all the time. So anytime you lend somebody money, especially when you sell them on credit, like here, that's how you have the receivable, you're taking a risk. Okay, yeah, so you are assuming a risk, all right? And there's so what is a risk? A possibility of an undesirable event occurring. What is the undesirable event with respect to a receivable? That they don't pay you back, right? So this 800 represents the actual value of receivables, right? But if we know from experience some proportion, some percentage of these people don't pay us back, right? Is it realistic to expect that we're going to get back the full 800? No. So if you put in your balance sheet, hey, we expect to get back the full 800, you are not being realistic, you're not providing accurate information, and you're not doing your job as an accountant. So that's where prudence comes in. Prudence says, hey, if you don't think this is the actual value, even though on your books it says so, you have to make an adjustment. So what we do is we create this provision for bad debts, or this allowance for doubtful debts, and we subtract it from the debtors figure in the balance sheet. Now, we'll come to balance sheets probably next week, right? For right now, we're talking about the income statement portion of it. Now, bad debts, we dealt with bad debts a little before. Now, bad debts and the provision for bad debts is not the same thing, eh? This bad debts here is the actual value of debts that went bad, right? So people owed us this 980, but then they told us, hey, I actually can't pay this back, you know. And you're like, oh, womp womp, right? So you had to write it off. You had to reclassify it as an expense. Why is it an expense? It's actually a loss because somebody owed you money. Why did they owe you money? Because you sold them goods on credit. So if somebody owed you money for goods that you already gave them and then didn't give you back, technically speaking, you kind of gave away goods for free, which is a loss on your part because you had to pay for those goods. So if you paid for those goods and then you sold it for $0, so no matter what the cost price was, if your selling price was 0, you're bound to make a loss, right? So that's why the bad debts item is an expense or a loss item, all right? So what I'm saying here is that out of this 800, right, we know that some percentage not gonna, we have to make an estimate, right? A best guess. So in the question, what does it tell us here? The provision for doubtful debts must be what percent? 15%. Now, there are two stages to the calculation of the income statement figure. The provision is just 15% of the 800, as 120. But that is not the income statement figure in relation to the provision for doubtful debts. I'll say that again. 15% of the 800 will give us the provision, right? The allowance. But that is not necessarily the figure that goes in the income statement, and I'll tell you why. Because there's an existing provision. Remember in the depreciation, in the previous question, we had a trial balance figure for depreciation. So that was the depreciation charge in the past, right? We might use it to calculate the depreciation for the current year under the reducing balance method, fine. But the figure in the trial balance didn't go in the income statement. Only the new depreciation did, not so? Right. So if you find 15% of 800, you get 120. Do we have an existing provision? Yes. How much is it? 80. So if we have to go from the existing value of 80 to 120, is that an increase or a decrease in the provision? An increase of how much? 40. It is that increase that goes in the income statement, much like when you calculate your depreciation, the calculated figure goes in the income statement. The new depreciation goes in the income statement. Same thing here. So I'll go over it one more time, right? Sorry, right. So the, hold on. So the provision for bad debts. 1 second. So, right, cool. So it's a kind of two-stage thing, right? So the first thing we have to do is find 15% of the receivables figure of 800. Now that gives us 120, and we have an existing provision of 80. So what we then have to do is find the difference. And the difference would be, well, in this case, it'll be an increase, right, of $40. Right? Now, just so you know, it's quite possible for the provision to decrease. If this existing provision was 150, and we calculated 120 as the new provision, to go from 150 to 120 is a decrease of 30, right? And that would actually be added to gross profit. You know, like how on Monday we added like rent revenue or commission revenue or whatever it was, right? If we and discount received, right? If we have a decrease in the provision for bad debts, that is added like a revenue, right? It's question. Yeah, because that is the account that's being adjusted. That's the adjusting figure, right? So, yes. Yes. So what Jaden said is, should you work out the provision for bad debts before you start the expenses? Yes, right? You should even work it out before, as you finish gross profit. As a matter of fact, when you start the question, because when I was in Form 4, Form 5, and I had income statements I was practicing, I can't tell you how many of them I got to the expenses section, I calculated the provision figure, and it was a decrease. I had to go back and scratch out my gross profit figure and fit it in there and all kind of drama. So my habit became, hey, the first thing I go and check is what happened to the provision for bad debts, right? So that's a good tip, right? Hey, Khalees, how you doing? Good to see you again. Right, so once again, the provision for doubtful debts or provision for bad debts income statement figure is the change. So it's not going to be the figure in the trial balance, right? Good to be here. Glad you're here. Good to have you on. Yeah, it's not going to be the trial balance figure. Much like in the previous question, the depreciation in the trial balance didn't go in the income statement, right? We could use it to calculate. Yeah, no problem. To calculate the income statement figure. How do we do that? Well, first things first, you take the percentage that they give you for the provision for doubtful debts, and they multiply it by receivables, right? Also called debtors or trade receivables, account receivable, right? Because it's a percentage of what is owed to you that you are trying to figure out that you mightn't get, right? So in this case, 15% of 800 was 120. Then you have to compare that 120, the new provision, to the existing provision. 120 is clearly more than 80. It's an increase of 40, all right? So if it's an increase, we include it in the expenses section. Right now we're gonna add up all of those. All right. I'm gonna take that and these. All right, and that's gonna be our net income there. All right, so you guys were good with everything here, and this is the new item. All right, so I'm gonna send a picture in the chart. What is this now? Quite looking Ben. Yes, it is. Okay, so I think we have time for one question. When we come on Monday, we'll just probably round off and practice a couple of questions from scratch. Right? As in the whole question, the whole thing from sales come down the line, right? Which means Wednesday we probably start in some balance sheets. As the 19th, yeah, we could do balance sheets in 3 sessions too. That's fine. So those 2 major things you'll have. And after that, we could decide if to do partnerships, companies, etc. You know, you'll have mock coming up, and they probably want to be at least somewhat prepared for it, you know? Okay, Google Meet. If you guys are good with what I talked about in terms of how to calculate the income statement figure for the provision for bad debts or for doubtful debts, just kindly give me a G. Right? If you're good with the item in the kind of orange or yellow, or however that's showing up for you, right? What color that is, just give me a quick G. If If you need me to re-explain one more time, not a problem. Let me know. You gotta give me the R. All right, cool. So 7 out of 8. Okay, no problems. Well, number 8, let me know what's going on, right? Okay, cool. So what I'm gonna do here is let's find the last question for today. Right. Oh no, so not even this. That one had to go to. Correct. Yeah. You'd have to add it to gross profit there. That's correct. Yeah. Right. Okay. So this question, Zodiac, unfortunately doesn't have any provision for bad debts, but I will give you. It has depreciation and accruals and prepayments. Well, an accrual and a prepayment, right? So what I'm gonna do is I'm gonna take that out. This is the Jan 2019, right? Okay, cool. One sec. 2019 question and oh no, right. Right. So give me one sec. Let me just count something real quick. Um, 1, 2, 3, 4, 5, 6, 7. Yeah. All right. Then okay, I'll do 10. That's fine. All right. 1, 2, 3, 4, 5. Okay, cool. What? So how come those lines? Okay, that's not. Sorry. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, it's an exact fit. All right. So give me one sec. Oh, let's clear that out. Sorry, I didn't realize I left that stuff in. Sorry about that last time. Oh, this is Zodiac, right? Zodiac Enterprises, I think it was. All right, so from there, we're going all the way down to here. 2019 template 2. All right, we're going to make that fillable as well. So you guys online know how to write out the whole thing. All right? But of course, if you prefer to write, by all means, right? And again, I mean, in the exam, you're going to actually have to write. So, yeah. All right, so I'm going to pull up the question. So anybody who wants to start, could start. Returns discounts, right? Right, let's take out this piece here. Okay, so everything that's relevant and visible. Sorry, everything that is visible. Everything that I need you all to see is 2019 question, 2019 template 2. And Aisha. Okay. Um, Crap, I was supposed to keep that open. Right. I'll just print this one. That was supposed to happen. So we have 9. Um, okay, so everything that's on the screen is what we need to do, what I want you all to do. Right, so you can go ahead and start. Those in person, just give me a minute. It should print in a minute or so. All right. I won't worry with the question. Oh shit. like I said, this question unfortunately didn't have a what you call it. Right, so what is the capital? The capital 32,757. Jai Park. Alright, sorry, just give me 1 sec. I have to put some more mass papers to print. What? Oh, okay. Oh, that's what happened. Alright, so shift end. That's a control end. Alright, here. Take all this. Print. Right, put this back on. Who's that now? Right. Yeah, so go ahead. Use the including board. So don't forget the discounts. The 322 is the discounts allowed, right? You have adjustments for utilities, for rent, and to depreciation. So you have straight line and reducing balance,
Which one is discount allowed?
Yeah, one in the debit column, yeah. I'll do 12. I'll make a 9 and 4 is 30. Oh, okay. That's what I mean. Alright, Jordan jump out too. Alright. There's no provision for bad debts or doubtful. Yeah, there's not that item is not in the question, unfortunately. No, we have the depreciation expense to calculate, right? So it says here the motor vehicles is 25% using reducing balance. So remember that's multiplied by the net book value. So you take the cost, subtract the existing provision, and then multiply 25%. What year is this? This is the Jan 2019 question. Jan 2019. Wait, I didn't check YouTube at all or no? Wow. Anybody on YouTube? Nope. Okay, cool. Yeah. Yeah, no problem. Alexia, afternoon, how you doing? You. Right. Yeah, go ahead. today, equipment come today, system come today. Recently, I had a double check, but these are the most recent questions. So, no. So I could give it the remaining 3 minutes. ready? All right. Let me see. Okay, cool. Okay, so like I said, unfortunately, this question didn't have a provision for bad debts item, so we didn't get to practice that today, but we will. And again, I could always, like I said, I could recommend checking out my video on YouTube on it, the whole topic, right? So let's get this done and call it a day. Well, for PoA, that is. All right, so let's go. Okay, cool. Where was I? Oh, that's not. I'll just put the solution up, right? So this is the solution here. Let me zoom out a little bit. Right, okay. So discounts allowed was 322. Wages and salaries 31,851. Motor vehicle expenses 1121. Right. So the rent and rates had a prepaid portion of 75. You subtract that, you get 8451. Utilities had an accrued portion. You add that, you get 2332. Right. So for the depreciation, okay. So I think I should probably put in the calculations for the depreciation for those items. Right. So the motor vehicles is 25% recent balance. Okay, cool. I do a 14 now. Zoom out a little bit. Right. So for this one, it was %, of the 7,900 minus the 3,480. Right, and then for the shop fittings, it was 10% straight line. So that's just 10% of 5,000. All right, cool. So we'll maximize that, and I'll send a pic of this in the chat, right? Okay. All right, so folks, so we have mostly completed our income statement revision. Even if you were to stop here, you could put together what you know, all right, to answer a full question. But of course, it would be better if you got some more practice with full questions. So, and of course, there are some very irregular questions which I want to show you all. Right now, again, I have a video on YouTube that I did back in like 2019 with all of those already, so I could send it out. But I prefer to work it with you all in class to get some feedback. All right. So, ladies and gents, that's about it for today. All right. If anybody has any questions they didn't get to ask during class, please feel free to WhatsApp me. Right. When you're reviewing, if any given trouble, again, I'm only a WhatsApp away. All right, guys. So I will see some of you all in about 20 minutes for maths. The rest of you all have a good weekend, and I'll see you all next week. All right. Google Meet. I'll go on. Bye.